Morning, Steve Reed in Chicago with the morning grain comments. Well, markets are a little bit easier overnight. Again, probably the second day at least for corn and wheat that we're seeing some profit taking, long liquidation after this week's strong gains. The numbers really haven't changed that much. We're still looking at some very tight U.S. corn and soybean outlook, and we're still watching some weather conditions that dry in southern Brazil, eastern Argentina, dry here in the southern plains in U.S., and still dryness in the Black Sea, although the maps do show kind of a snow event in parts of Russia next Sunday through Tuesday. Again, I don't think this is necessarily a pattern change, or does it make recharging the moisture, but it is something that's on the maps, and we might actually trade that a little bit. So today we get delayed ethanol data, which should show production about the same as last week, but stocks building up slightly. We've seen the crude oil market rally because of the news of the potential vaccine in 2021, but there's still demand is down, and we're still seeing too much supply to support crude oil prices at these levels. Stocks are a little bit lower, the dollar's lower, and we've seen gold inch up a little bit higher. So again, when you look across the board at some of the red numbers, market might be concerned a little bit about COVID cases increasing. We're still seeing record amounts of new cases here in Illinois, and the impact that might have on the economy both here and worldwide, especially in Europe. When we look at these USDA numbers, I think the thing that points out is that U.S. is still competitive as far as selling corn, and if somebody wants to buy corn, they probably will have to come to the U.S. to get it. We're still looking for China to come in and buy more U.S. soybeans. They're estimated to have about 33 million metric tons on the books, with the numbers suggesting they have shipped maybe almost 27 million tons on the books, shipped 12, and we have 10 in the unknown, which some people think 6 is to China. So I think the market kind of needs to see them back buying, especially in that Jan-Feb time frame, to push higher. World vegetable oil prices continue to make new highs worldwide, led by Argentina sun oil, the Rotterdam canola oil prices yesterday. India paid 520 over to buy some Argentina soybean oil, and U.S. soybean oil is still the cheapest in the world for sourcing. Palm oil production expected to show a seasonal decline, and China demand continues to grow. So all those things suggest that at 37 cents a pound, soybean oil prices will probably continue to trend higher. So we're still looking for higher soybean and corn prices. Wheat prices will probably stay in a range unless the weather conditions continue to deteriorate in the Black Sea, U.S. and South America. And we'll just kind of see what the USDA has to say as far as export sales tomorrow. And the commitments to traders report, which is very important to see how big of a long position the funds have, will be delayed till Monday. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.